Okay, we're just going to do a review on special journals. And going back to our flow chart, in this chapter, we have been studying the purchases journal and the cash payments journal. And going down in the flow chart, you can always use this as a reference when you're doing your assignments. One of the key questions you want to ask yourself is, does the transaction involve cash? If the answer is yes, you're going to work your way down. And you say, did cash increase? If cash didn't increase, the answer is no. You're going to use your cash payments journal. If cash did increase, you would use cash receipts. The other key question you want to ask yourself, if the answer was the transaction didn't involve cash, the answer was no, then the next question you want to find out is, did you purchase merchandise to sell on account? And if the answer is yes, then you're going to use the purchases journal. If the answer is no, then you have to say, did you sell merchandise on account? And if you did sell merchandise on account, you'll use your sales journal, and we'll get into that in a later chapter. So basically right now we have learned the cash payments journal, we have learned the purchases journal, and the general journal. And now the general journal is used for all those catch-all transactions that don't fall into one of the other four journals. So going back to our assignments in Applia, in the work together problem, if we purchase merchandise on account, the clue words in there are purchase merchandise, okay? If it's purchase merchandise, know that you are going in purchase merchandise on account. Whenever you see those words, make sure that you use your purchases journal. And you're not going to debit the merchandise account. Don't ever do this account. You are going to debit purchases. So we're going to look and see how that transaction looks like. So for our first transaction, we have purchase merchandise on account from American Tools. You're going to always put your date in, October 2nd. American Tools is our vendor name. So when it says on account, you need to look and see who the vendor is that you're purchasing your merchandise from, and you will always type the vendor name in there. Your source document is always going to be starting with a P, 116, and we're going to put 116 in here for our purchases number. Notice the heading on this column. It says purchases being debited, accounts payable being credited. So two accounts are entered in one transaction. And this is a big time saver. So anytime you see purchase merchandise on account, you are going to use the purchases journal. Now, the second journal that we're working with is the cash payments journal. In the clue words in a cash payments journal, you're always going to see the words paid cash. You know that cash is one of the accounts being affected, and if cash is being paid out, think of that as an asset account, and cash would be decreased. Assets decrease with a credit. Then you have to always look and see what else account is being affected. In this first problem, telephone bill. Telephone bill is a utility, and that is an expense. So expenses are always debited. So we're going to look at this first transaction here. We put our date in, utility expense. Our check number is given right here, check 321, type the number in. Put in the dollar amount for the expense, and you're putting this in your general column, and cash is being credited. Let's skip down to the next transaction, paid cash for office supplies. Again, paid cash. We're going to know that cash is going to be credited, and we bought office supplies. It's an asset, and our asset is being debited. Now our third transaction, we're paying cash to GMT Hardware for merchandise for a list price of $800 less a 60% trade discount. Now, In this transaction, we have a trade discount going on. What we're doing is a trade discount is a reduction in the price that you are going to be paying. So if the whole original list price was $800 and we're getting a 60% discount, notice it says less 60%. An easy way to figure out what you're actually going to owe is to say, what do I actually have to pay? Since the whole amount is 100%, it's easier in one step. You can just say, I'm going to end up paying 40%. So 800 times 40% gives you $320. So that's all that we're going to put on our debit. We don't need to handle any transaction that says a discount. There's no account that's being affected for that. One thing that you do need to pay attention to, just like in our purchases journal, even though we were purchasing merchandise, you're not going to use that account number. You're going to use the title purchases. So make sure that you do that. You debit purchases for the net amount. So in this case, we had a 60% trade discount, so we're only going to record the 40%. 320 to our general debit and cash credit of 320. Now, the other type of transaction that you're going to see is a discount for paying it early, a 2% discount. So we paid cash on account to West Supply, and we have our purchase invoice, $199. That's when we originally purchased it, okay? Originally, we purchased some merchandise, and we would have put it in our purchases journal, and now we're paying that bill off. So on our books, originally we debited purchases and credited accounts payable. Now we're coming along and paying that. On our books, we had $3,420 in our purchases account, and we credited accounts payable. So we know that we need to remove that accounts payable for the whole amount. So if you look at your columns, anytime you see accounts payable being affected, accounts payable is being reduced. So we know that we need to debit it, because the normal balance of accounts payable when it increases is a credit. So we have a debit to accounts payable for $3,420. The next thing that we need to do is figure out what our discount is. $3,420 times 2% or times 0.02. Okay, you can open up your calculator, type in 3,420, multiply times 0.02. Oops. Clear that out. Times 2% and hit equals. Try that again. 3,420 times 0.02. $68.40 is what our discount is. Discount means that you're going to be paying less, so you're going to expect, originally when we put purchases in, it was a debit balance, and a discount is a contra account to purchases, so that's why our title says purchases discount credit. And notice we have our $68.40 here. The other thing that you want to pay attention is to that you have this title that says debit, this is credit, purchases discount credit, and cash credit. Our two credits, $68.40 and $35.60, need to equal our one debit of $3,420. So we had $3,420 less $68.40 to give us our cash credit, which is going to be lower because we have our discount in there. Okay, our last transaction is that we paid cash on account. So if we see the words on account, we know that we need to be using our accounts payable column in our special journal. It says purchase invoice 182. That means we recorded it previously, but this is not our source document. Our source document is the check number that we're paying with, check 325. It says no cash discount was offered. So we know that we need to pay off our liability. So liability is going to be debited, and we're paying cash. Cash is an asset and it's going to be decreased because we're paying out money. So when we go to our special column, we put in our vendor who we're paying off, our check number, of course your date, and then put in accounts payable debit amount and cash credit.